All right. It's Sunday, 11 a.m., September 13th. My name is Amal. I am the head analyst for the Alpha Trades community, where we reside on the Discord channel right here, Alpha Trades. The link is below. You guys can come join us on the free side, or if you want to go to the paid side, you can go to our website, thealphatrades.com. You can hit the products page right here, and you can buy our Advantage membership. Where you get access to all the lock channels, like the equity side, which Faisal is the head equities analyst of. He does a lot of analysis on every single day of market open, market close, of what he's looking at in the market, how he's going to trade the market, his outlook through the day, week, possibly even the month, all kinds of great stuff. So again, hit the thumbs up if you do enjoy our content. And for today's video, we have a lot of topics to discuss. And I got Faisal here with me, so welcome.
What's up, everyone? Hope you're doing good. Amo, how are you doing?
Fantastic. Lots to discuss. And, we were kind of chatting back and forth right before the call. And I'm really excited for today's topic because we're going to go over some of the hot stories of the week, like Barron's calling, the current stock market a bubble, which you and I are still trying to figure out how we're defining the bubble, if at all it is a bubble. Big story on NKLA, Hindenburg Research, they put out a pretty big hit piece in terms of, NKLA pretty much creating some sort of miscommunication or fraud. I don't know what to call it, but the investor community seems a little bit more misled. And I think a lot of short sellers kind of jumped into that opportunity. NKLA was down, I think, 15-20% on the week. And, I think this is definitely a story that I want to get into with you. The other thing I want to discuss is, of course, we had a big sell-off last week. Speculative options activity was severely high prior to the sell-off, but even now after the sell-off, it's still ridiculously high. So I want to get your thoughts on that. But let's start off with just your overall view, right? What did you think of last week?
It kind of went a little bit according to plan. If you guys had listened to, I forgot when the last time I put out a video before Friday was. I think it was last Friday. I was really expecting the selling to come in on Tuesday, which it did. It continued on to Wednesday, and that's when I expected it. The market was way too oversold at that point from a short-term view, and you saw a nice bounce Wednesday, and then Thursday, I had actually alerted the community early on that where the market had opened on Thursday, it really gave me a clear indication that the leadership stocks were not breaking above their key resistance levels, even though the market had opened up, I believe, 200 points, and the broad indexes were actually green, almost 1% across the board, I believe. There are small signs that I look at where if things look so good in the indexes, then I should see it translate to momentum in leadership stocks, whether it was Caterpillar or Apple, Tesla, all these different stocks. I didn't see that happen. And so Thursday morning, I let people know that was a good time, in my opinion, to lighten up on the exposure. And then ultimately we got even more selling come Thursday and Friday. And it looks like we probably have another leg down Monday, but ultimately, I don't think this pullback is going to last long. So it's a wait and see. I think we go down maybe 5 to 7, 8%, and then we probably reevaluate the market and its leaders from there.
So are you talking about the index itself? You're thinking the index is going to go down 5 to 7%?
Yeah, no doubt. I think tech is probably going to go down somewhere 10%, a little bit more than the S&P or the Dow. And I think small caps will probably go down a little bit less than the NASDAQ, but more than the S&P and the Dow. But yeah, I'm definitely expecting another leg down as a result of what we saw last week.
Okay, so I'm going to take some notes on this because I want to get our short-term views and our somewhat, relatively longer-term views, which is just the rest of the month and maybe the rest of the year on paper, so people could see a little bit more clearly.
On digital paper.
I know, right? I feel like sometimes we get all these random comments from trolls like, I don't know why you guys are shorting the market or this or that. And so I want to let people know visually, like, this is where Faisal and I stand. So you're expecting, maybe a negative a 7% to negative 9% pullback in the stock in the indexes?
Yeah, within the next 2 weeks. I think I want to say a week, but I don't really want to gauge volatility at this point, but I definitely think you could see another 10% pullback within a week. It's perfectly acceptable within this market environment, but I'll go ahead and give it 2 weeks just to give myself a little bit of breathing room.
Fair point. And I'm actually agreeing with you on that timeline, and I'll expand upon where I'm seeing the market going to. And what about tech stocks?
Oh, tech stocks. Yeah, I think 10%. It's really hard to gauge them because you have stocks like Tesla, Apple that I think can go down another 20%, maybe 15% more. I got to look at my support levels again, but I definitely think these stocks have a lot more room to come down as far as matching the volatility that they saw on the up cycles. And that's basically what I'm basing it off of. It's not me trying to indicate, oh, these stocks have to trade at this fair value in order to be perfectly fine. No, I'm just trying to mirror a little bit of the support levels that we saw in the up cycles about a month ago, because we were still in a very volatile time, but we were just going up. And
Mhm.
you have to assume that when we go down, the volatility will, of course, escalate. And so I have to account for if we saw, a 5% upside week in the market from week to week on the good weeks, we should probably see 7 to 8% on the downside. So that's my reasoning from there. It's not really, you know, rocket science or whatever, but that's just my broad parameters that I'm looking into.
Okay, fair point. I actually pulled up the Apple chart and I was kind of looking at just this big gap that's in there. That's kind of along the same lines of percentage drop that you were talking about, which is maybe 15 to 20% in Apple. So, and that would fill up the gap right here too.
Yeah, and those stocks are still very extended from their pre-COVID highs, which, in Apple's opinion, I really don't know how the stock ever got to be this high, because they've been warning about their new iPhone sales and all these different things. And, there's some fractures as far as their dominance in the app marketplaces we're seeing with their little battle with Epic, but I don't know if that's really going to get anywhere, nor do I think it'll affect the stock. But, Apple is definitely been one that surprised me as how far it's pushed the envelope. But once again, I think that goes back to a topic we're going to get into later, which is how much are people willing to pay for safety in this market environment?
Yeah. Okay. Fair point. So I'll sort of discuss my views on, what we were talking about, the market going up so aggressively. And, this is where we dive into the topic of Barron's writing this article, which was, is the stock market a bubble? And obviously they believe so. I believe so. And I think you, to some degree, believe so, but we have to make it clear of exactly how we define a bubble. So I'll go first and I'll explain my view of how I see the bubble developing. Okay. So for example, with the accelerated movement, I don't want to pull up an index, but let's just say, things like if we're looking at NKLA, right, the way it kind of went parabolic basically since March all the way till June. Even now it's at a historically just ridiculous valuation for a company that doesn't really even make anything, don't really have a whole lot of, money on their side either. Whether you want to talk about Okta, right? I think Okta we spoke about months ago, and you said that they have no profitable earnings till 2022, and Okta kind of took off, from over here, almost 100 and 120% or something from the March low, right? Was it 160%? Same thing with Tesla, right? So I'm defining, first of all, how I characterize a bubble within the realms of, these stocks right here. So Tesla up, almost 500, 600%. So my definition of how I am seeing this market as a bubble is that there's a concentration of money and wealth flowing into stocks that clearly are nowhere near their valuations of earnings, of future earnings, anything close to reality for that matter. Now, I think that's one of the psychological definitions of a bubble. Now, the other part of the definition is hyper accelerated, movement of the stock to the upside, just manic sort of euphoria in the market, where what you're seeing right now is you have, even after a week of a drop, which was, good 10, 20% drop in almost a week, you still have options volume trading at 20-year highs. Okay. So I don't believe that this is a broader market bubble. I think it's much more concentrated in, say, a handful of stocks, maybe 15 stocks at most. And I think the bubble is not driven simply on the fact that people are just piling in because that's where the news and everything and the media is pointing people towards. It's rather that I think the Fed has kind of created this environment where whether you're looking at value or growth, those are just not moving because there's so much uncertainty in value and growth because of what's happening in the economic environment. So I'm thinking that, okay, I think this is a bubble. I think that even if we do get a pullback, maybe another 10, 20%, like you said, I don't see any reason why the market doesn't go higher from here because we have the elections coming up. I don't think the Fed is going to change their story at any time to be, the more stimulative power that it has been thus far, because I don't think it wants, blood on its hands because the economy is still suffering. And then at the same time, if the stock market starts selling off, well, then is it that the Fed is just going to stop, backing the market? Or at this point, maybe the market is trying to figure out, well, okay, maybe another 10, 20% once the market starts selling off, maybe the market is testing the Fed. At what point did they jump back in and, start doing their whole junk bond buying, maybe investment grade bond purchases, going into ETFs, etc. So long story short, that that's kind of where I am. That was like a big word salad.
Word salad. Yeah, that was a sentence salad. Definitely. No, for the most part, I do agree with you on the fact that these bubble characteristics, like I'm someone who does not define this as a market bubble. In fact, I think I've seen people compare this bubble to what we saw in 2000, and I wasn't trading around 2000. I don't really know what the feel is like, so I'm just going to speak on it from that point of view. But a lot of things that I see when I'm reading upon what happened in 2000 was this key theme, which was irrational exuberance of buying in names that that really didn't make sense. They weren't going to be profitable. They weren't even giving out any timeline when they were going to be profitable. It was just this irrational exuberance of buying. And I think your point that the Fed has brought on this bubble is where I disagree with it a little bit, because I think if this was really a Fed-induced bubble, you would see companies like Royal Caribbean, Southwest Airlines, you would see a lot of these companies that are struggling end up saying, you know what, this is still a short-term problem as far as how the market's looking at the virus. We will get through this. And ultimately, those facets, whether it's airline travel, hospitalities, everything will survive if the Fed really does have their back. And I think at this point, we're assuming that the Fed will always have the backs of the companies that will struggle for probably the next year or 2 years, especially if you think that's what the bubble is induced of. But that's...
Well, let me push back a little bit on that. Okay, so okay. I think we already know that. Okay, so I talked about, the reason why value growth companies are not, following the, say, high growth and tech stocks is because I think investors know for the most part that at present moment, there's way too much uncertainty in that specific area, right? If you're talking about growth stocks or whether it's, I don't know, like value or growth, whether it's industrials or financials or, Royal Caribbean or even things like Ford Motor Company or General Motors, I think those are the stocks of, let's just say the past, past COVID era, right? Pre-COVID era, rather. The post-COVID era brings upon a different dynamic in the market, which is, well, these are some of the hottest stocks that we feel like have some future, like Apple or Tesla or Zoom. Now, I get that they have value, but I think investors also understand that not only do they have value, but they have the ability to sort of reach into the average mind of a retailer, and they have more pull in that sense. Like, I don't hear people, retail talking about, let me go buy some Royal Caribbean stock because I truly believe that, we're going to come back out of this coronavirus, pandemic and RCL is going to do great. What I'm hearing from retail and the manic phase of the market is, well, I don't really care about anything else. Stocks go up, and let me just buy Tesla because it's the hottest stock, and everyone's piling it. So that's how I'm sort of defining the bubble. Is the bubble is not going to flow into other areas of the stock market because it's not a widespread bubble. Just like the tech bubble wasn't a widespread bubble.
Yeah, no, I agree with that. It's just if the Fed is somewhat inducing this bubble because there is a put on how low things can go, then wouldn't you say that things that are already relatively low versus things that are already relatively high, you would see some type of balancing out? That was just my little reference to that. But for the most part, I do agree with you that this is mostly a secular bubble, and I don't think you can. I'm not even going to say tech stocks are in a bubble because I think there's a theme, like I talked about before, there was irrational exuberance in 2000. In this case, I think what we're seeing is rational exuberance. You're seeing people pay, extended premiums for safety. And not only safety, but accelerated safety in terms of these companies, especially in the software space, are actually seeing accelerated growth as a result of the tech adoption that's happened because of COVID. So these companies are not only growing, but thriving in this environment. And I think the fact that premiums are extended it's tough to gauge. Like we can look at it and say, wow, Coupa trading at a 300 PE is insane. But, it makes sense in terms of there's not a whole lot that's really attractive from a relative standpoint, whether you're looking at hospitality sector, airline sector, all the places that money used to flow into a little bit now has to be put into safety. And so as a result, you've seen those premiums extended. And I don't think it's a indication of irrationality, which is why I don't think this thing is a bubble. And I think you can see these tech stocks trade at high premiums for an extended period of time. Now, I think that they're going to consolidate at these high levels and wait for their earnings to catch up more so than pull back. But through this consolidation period that will probably happen within the next year to 2 years, and I think we may have hit highs on some of these software stocks. Like Coop, I think we may have hit a high on that stock when it went up to 350 or whatever. You'll see, the winners and losers phase out throughout the next 1 to 2 years as these stocks consolidate. And the winners, I believe, that'll take this market up even higher than the highs that we saw a couple of weeks ago will come from the healthcare space and the industrial space as a result of, the infrastructure bill coming out at some point. I think no matter who wins, that's definitely going to be a key for the jobs recovery. And the healthcare space just continues to see the most innovation out of any industry, and I'm including tech. So those are definitely two sectors that I'm expecting to take this market higher. And I don't think it's any indication of a bubble. I think this pullback that we're seeing is just a very volatile session in a bull market that I think will last another 5 years.
Wow, that's really interesting. So, I guess I can't disagree and say that the market could trend up higher because I also believe the same thing. I think where we have a difference in understanding is you believe that the sell-off was going to continue in tech stocks, and at some point, you're saying that Apple, Tesla, all these stocks will come back down to earth, maybe, another 10, 20% down from here. And are you saying that they're just going to consolidate there, or do you think that they're going to head back up, by the end of this year?
So I think the big dominant ones like Apple, Microsoft, Tesla, Amazon, ServiceNow, Shopify, the ones that have the dominant moats in their business, they will continue to move up with the market and probably see tremendous gains. I don't think it'll be as volatile as the gains that we've seen over the past 6 months. I don't think they're going to replicate it over the next 6 months or any 6 months after this. But, in the software sector, specifically in the cybersecurity sector, where you're seeing very extended premiums and you're just seeing a basket of stocks being bought just because they're in this technology space. But in my opinion, the estimates really don't look like they're going to match up within the next 2 years unless they just continue to just see enormous accelerated growth, which is not what they're expecting. I've looked at the estimates in 2021, you're having companies like Coupa, Zscaler are showing earnings declines. In 2022, you're seeing stocks like Zoom, which are going to grow another 600% next year, are only expected to grow 9% in 2022. So you're seeing that drop off. And at some point, when you get that drop off in growth, and once again, these are just estimates, things can change. And I think analysts, for the most part, have been very conservative over the past 3 years on these estimates. Once you get those dramatic drops in estimate growth, and especially earnings growth in general, when it comes to fruition, that's when you'll see these stocks really sort themselves out as the winners and losers. But once again, that's only in the very extended stocks that you've seen go from 1 billion to 20 billion in 6 months. And it doesn't really apply to the Apples or the Amazons that have dominant moats.
Okay, fair point. I think I can't really disagree with you on that, because I'm right there with you. The way I'm kind of looking at the market is, with all the political tensions that we have coming up in the election, and I'm sure being in Texas, Houston, you stated, is a relatively blue city, correct?
Yes, it is. Surprisingly, you wouldn't think so, but it is.
Yeah, I mean, honestly, I really didn't think so, but that's a surprise to me. So Houston being a relatively blue city, and what we would probably call Texas as a red ocean, you kind of get to see the dichotomy of the school of thought between the conservative side and the liberal side of the Democrats versus the Republicans, and I'm sure there's a lot at stake in the upcoming election. Now, if we kind of take that into account, we know that there's a lot riding on the terms of the stock market, which is, Trump getting reelected would effectively mean the same kind of, monetary and fiscal policy, possibly even, in the stock market. Now, the question is, do we just kind of keep climbing, or does the market kind of consolidate a little bit and we come back down to earth, like you stated earlier? Or do you think that, in the longer term, right, we just have like a hyper accelerated growth for the rest of the stock market? Because it seems like if this is the coronavirus pandemic era that we have to deal with, I don't know, maybe for another year or two, how can we rationalize the valuations even at present moment, let alone say a year from now, if you're saying that you're saying that the market is going to be 2x or 3x from where it is right now, right?
I think it could definitely be 2x best case scenario. But once again, you're going to get these deep volatile swings. I think COVID has really made this market extremely volatile, because it's relied a lot on the big tech stocks to push this market up. And now I forgot what the statistic is, but now the top 5 stocks account for 20 or 25%. It stayed around that level for a while. But you've gotten to this point where that in turn has created this immense market volatility. And you're right, as long as we stay in this COVID environment, I think things will continue to be like that, most importantly from a volatility standpoint. And so you can get another period of time where you're going to see this irrational or rational exuberance where people pay up for premiums. Let's just say, God forbid, we go into another really bad wave of COVID, and I don't know if at that point we'll have a vaccine or better treatments, or better testing or whatever, but let's just say people just stop going out and we have this sort of economic regression again. I could see the market pulling back from there, but once again, you're going to see that rush to safety. And so I think it could play out like that, but for the most part, yeah, I think you're going to see explosive growth from the industrial sector, benefiting from a lower dollar, as well as a ramp up in infrastructure spending and the healthcare sector, because that's just where most of the innovation is happening. And you also can't count out sectors like the housing sector, consumer retail sector, and of course the top 5 companies that will probably continue to dominate for the next 1 to 2 years. So yeah, I think it's perfectly within the realm that the S&P could double from here, given where volatility is and where the economic landscape looks like, at least for the next 1 year, because I think the virus factors are a little bit uncertain. I think 2 years down the road we'll be totally fine, but 1 year I think is still very uncertain.
Okay. So I think that's a respectable number, like 2x from now until 2 years from now.
You know what? It kind of
Um,
sounds crazy. I'm like when I look at it, see, this is what you get when you write down your notes. When you look at it, it looks it looks a little crazy. Go ahead and numb it down to like go ahead and put it down to 1.5. I'm not gonna
okay,
say double. Yeah.
fair point, fair point.
Yeah. I'll just give myself a
Um,
little bit of room.
well, the market is definitely on a pace where it is on an accelerated path of growth. So I honestly would be surprised if things continue as they are. Here's how I kind of see the market playing out. Okay, and I'm gonna provide like a bull and bear case scenario, so people on both ends can kind of understand where I'm coming from. So I think a lot of market movements, especially in equities, really is helped by a weak dollar. Would you agree with that?
Totally.
Okay. So, you know, um, I haven't traded forex for more than, let's just say, 5 or 6 years. Okay. The one thing that I understand about forex, or what I understand about the dollar specifically, is it is by far the strongest currency on the planet. Like, there's bar none, nothing comes even remotely close. With 78.5% of global trade conducted in US dollars, the dollar moving whichever direction it does ultimately will dictate many parts of the world and their respective markets moving along with the dollar. Now, the correlation is very simple to understand. With a weak dollar, you have the US equities going up, gold going up, even higher beta assets like Bitcoin going up. With a stronger dollar, you don't really get that, right? You have typically gold selling off a little bit. You have, the US equity selling off, and same thing with Bitcoin. The place at which the dollar resides right now is a 10-year trend line, which I spoke about a little bit ago, in the past several weeks. And the fact that we're kind of, right near the edge of this trend line, okay, I think this might be on the linear chart, which is a little bit better. We're teetering right there on that trend line. We haven't quite broken it. I don't necessarily know if from here we're going to push up, but what I often hear on Twitter, or general sentiment of the dollar is, it looks like the dollar's getting ready for a further sell-off. It's going to go back into the 80s or the 70s. I think that's the point at which I think that, okay, it looks like most of the world is right now in a short dollar position. I know US equities are short dollar, right? Implicitly they're short dollar because they're essentially hoping that a weaker dollar helps propel the stock market. So if I'm looking at most of the market positioned in one direction, I'm thinking the dollar is probably going to fool everyone and go up. Okay, would you agree with that? Like, if the dollar goes up, you'd probably see the markets overall just sell off even further. And if the market is generally short dollar, position as short dollar, more than likely the market is going to fool people and go to the upside. Are you kind of with me on that one?
It depends on how the dollar moves. If it moves in a very volatile fashion, I think the market will digest that as very volatile selling in the near term. But if it moves progressively slowly to the upside and the market has more time to digest it, then I think it could be worked out. Like, you could see the market not sell off as much as a result of that.
Okay.
It's all
Okay.
about the timeline of volatility.
Okay. Fair point. I think over the last couple of weeks, the one thing that I've noticed is, the dollar has kind of created a nice base right here, right? And personally, I'm thinking that there might be some upside movement in the dollar, maybe towards 94 and 95. I think that goes perfectly along with your thought process of tech and possibly, the overall stock market pulling back another 10, 20%. Now, when it comes towards this 94, 95 level, I think that's where, the key resistance is, where it faces, in that 94, 95 level. Now, from there, I don't necessarily know exactly what's going to happen. Do we come up to this area right up here, and then we start breaking down again? Because then that goes along with your timeline of, if we come up here and we start selling off some more, then I think we're going to have a multi-month, sell-off of the dollar, which again would be very beneficial for, the US equities, gold, and Bitcoin. Now, the bullish case, for the dollar near term, or rather, I guess the bearish case, because I just stated the bullish case. The bearish case is, from here, we just start accelerating back up because the stock market has been sort of overextended. I definitely think crypto market has been, really overextended. And I think gold has kind of already proven to most people that has gone up, quite a bit. And as you can see, it's kind of really just hovering on this base right here. It's not really able to kind of jump away from it or break outside, this trend line. So that brings up the case for, a bull dollar and a bearish market on gold, US equities, and risk assets like Bitcoin. So that's kind of where I am. What do you think about those two theories?
I think I would agree with you on, well, first of all, both cases, and I think you lined up both cases really well. I more so lean towards that the dollar's looking like it wants to go up, but that's just from me looking at it right now. I think, sure, if you do see a sell-off in equities, you'll probably see that rise in dollar, but I don't really know. I'm not really familiar on dollar technical trends, so I don't know how the technicals trade specifically, but I think both cases are definitely viable just based on what I see right now.
Okay, fair point. So I think I've made my case, both in the bull and bear camps, just for our viewers, so they get to see. But let's kind of dive in a little bit, to individual stocks, like what happened with Nikola, because again, Nikola is one of those stocks which I again, classify in this hyper extended sort of, bubble that we're creating. And Nikola, I think, is the perfect definition of a stock that really doesn't have a whole lot to show for itself as a company, yet it's, sort of a multi-billion-dollar valuation. And recently they were kind of called out on their BS about potentially misleading investors, misleading people on their products. And a short seller report that came out by Hindenburg Research really just kind of torched that stock down by revealing, some unsavory facts, if you will, about Nikola. Did you hear about the story? And first of all, what are your thoughts?
I did. I like saw it on my Twitter feed, but I didn't have a chance to look at it. I really haven't been keeping up with this stock that much. It's too volatile for me, so I just choose not to. But I think I saw something about fraud. That's why the
Mhm.
stock started selling up. Like I saw the deal that GM was investing all that money into them, and that's why
Mhm.
they popped like 33% in one day, and then the fraud news came out like 2 days later. So I don't know. Just from a technical perspective, it looks like okay. It's seen. What did it go from 55 to like 32? Oh God, that's a lot.
Yeah.
Okay, I would assume that it's oversold, but that's just from a technical perspective. Sure, it could go down a little more, but if it breaks below that previous low that it made in August, yeah, then that's a bad sign. If I were in the stock, that's my last support. That's my last line. But I mean, this with the name this tricky that's gone up so much, I would not be surprised to see it break through that very easily.
Yeah, and I think a lot of people in our community, they really like Nikola. Maybe I don't know. I think most people like Nikola because they see Tesla as the leading example of what Nikola could potentially be in the next 4 or 5 years, which is a stock that moved up almost. What did it move up? Like it started off trading at $50, moved up all the way to 2,000, right? So almost a 40x. You know, um, I don't know if Nikola's the best example to compare to that. I think it's a great company. It has a very unique sort of outlook on, um, the hydrogen fuel cell cars, or rather trucks, that they're trying to get more into the commercial space. So it's not really a direct competitor to Tesla by any means. And I think that is a big space that could definitely give them, a first mover advantage, because I don't see any big company that's coming into this space where commercial freight trucks, commercial trucks are utilizing, say, electrical vehicles or hydrogen, fuel cell powered vehicles. So it's definitely got a huge potential. But I think for now, I'm kind of with you that it's very volatile stock. I personally think it's very overvalued, and I'm kind of waiting to see what this report is. Is it going to torch the stock down further? And if so, it could be one of those very unique buying opportunities for those who believe in the stock, say a 5, 10 year down the road, long-term hold?
Yeah, I think it's just way too risky, honestly. When you buy this stock, I don't even know what you're paying for over the next 3, 4 years. Are you paying for this stock to be one of the top three dominant players in this space? I mean, a lot can happen within 3 years as more of these companies get into the space. And I'm not going to say that nickel is going down to zero. I'm not a hater like that, but for all of those who want to play this industry in a safer way, I've said it time and time again, just play the biggest lithium miner in this space, which is ALB. ALB is a fantastic company. Fundamentally, I think the growth estimates are pretty conservative, especially if you think that this market's going to even see more players, and therefore the demand for lithium is going to be enormously higher. This company should tremendously benefit from the tighter market. So, especially given the innovation and the need for innovation is happening now in the electric vehicle space, I would assume that the demand for lithium is going to just spike up over the next 1 to 2 years, more so than I think the stock indicates. So ALB is a stock that's $94. I wouldn't be surprised if it's trading at 150 next year. So definitely keep an eye out for this one. This is not stock advice. This is just my opinion. But if I'm looking to play any type of electric vehicle, that's how I want to play it.
Okay. Lithium battery stocks. Okay, fair point. Cool. So what are we looking at for the week ahead? How should the viewers kind of prepare to look at the market? Because we had a pretty rocky week last week, right? I'm kind of looking at the market in terms of its key support and resistance levels. We even took out the previous Friday low. We took out, I think, the Thursday or Tuesday low, whatever we had. And so now we're kind of coming into that area, tapping it as resistance. So do you think that we're headed down, in an accelerated fashion next week, or how are you looking at the market?
Yeah, I definitely, I definitely think so. You guys already know I'm about 40% short. I was lucky to get into short names like Roku, and there was another JD.com earlier before this entire tech thing sold off. And I think you're going to see a lot more acceleration in selling over the next week, because not only did these stocks not break above their key resistance levels as the market bounced, but the leaders in the tech industry have not either. The main stock that I'm primarily looking at in terms of telling me about the health of the tech sector and high growth in general is Nvidia. That continues to be my number one stock that I'm going to buy on the pullback. Once I believe the pullback is done, I think as long as you continue to see this stock's micro technicals show bearishness instead of stability, I think that's the clearest sign to me that now is not the time to get into the market, because as soon as this market's ready to be bought, I can bet you that Nvidia is going to be probably bought before Amazon, Apple, Microsoft. I truly think that what this company said on their last call is just fantastic, and they look like they are probably going to be the next trillion-dollar company. I think it's $300 billion right now. I'm not going to be surprised if they're a trillion-dollar company within the next 3 years. Like, they're just in so many growth spaces that I just feel like they're going to be dominant, and just like they are in their GPUs and other areas, definitely in AI. Nvidia is the one stock that I'm looking to see stability in, and so as long as that's continuing to show me bearishness, I'm totally bearish for the short term.
So you're saying that Nvidia right now is showing you bearishness, correct? And that's why you're a little bit more still to the bearish side on the overall market?
Yeah, I think it hasn't totally broken down below its key support level that it's tested after the 10% drop that we got in the market. But once again, it's the short-term technicals that's like my secret sauce or whatever. It's still not showing me the stability that I'm looking for. And so as long as I continue to not see that, I tend to think the stock wants to come down. And if this stock wants to come down, I believe the market's not going to get bought up. It's as simple as that. So I think it could get bought up. I think I'm going to start seeing a lot of buyers coming at 440. You're going to see the stock correct a lot less than the other ones. But that's where I expect to see stability at. So when the stock gets to 440, hopefully we start seeing some bottoming signals in the other leaders as well.
Okay, good for us to keep an eye on this. Just looking at basic technicals from the standpoint of the S&P 500, I was kind of looking at this market and thinking like there's kind of a big channel that I potentially see developing is kind of, which is it? Maybe it's the other way. Let's see if it's on I think this is from, the linear chart perspective. Like, I think this was the channel that I was kind of seeing in the market. I don't know if you are someone who trades on the linear or the log charts, but I think for now, this is a pretty appropriate channel. Would you say?
Yeah, I would. Yeah, I think so. I would say that I don't really use channels that much, actually. Surprisingly, I'm not a channel expert, so I'm assuming. But you see at the bottom, it kind of broke through there and closed 2 days below that channel. So
yeah, so that's what I wanted to talk about. Is we're kind of breaking some key trend line supports that we've held from way the heck back here in May, right? And the way I look at it is, so I like to watch technicals because I personally believe that because of so much, HFT trading and a lot of people relying on a lot of technical information regarding stocks, aside from fundamentals, I think these are key markers that most people watch, which is the 200 moving average. And the 200 moving average, you stated that, you're expecting indices to drop 7 to 10%. Well, I think, if I'm not mistaken, we're somewhere around that ballpark, right? The 200 moving average. So, I think you're pretty spot on. I think there's a lot of technicals that are lining up to your projections, if you will. And there's a lot of other technicals that I'm watching, which are cracking. The channel is breaking. I think, I watched 20-day moving average that broke. I think the 50-day moving average, if I'm not mistaken, also broke.
I thought that held. I was seeing some stuff on my timeline.
I might be mistaken. I may have been watching Bitcoin.
Yeah.
Okay, yeah. So we're right on the 50-day moving average right now. So, if that breaks, I'm traditionally looking for 128 and then 200. And I think, again, like I said, that goes along with the ballpark of, your 7 to 10% pullback in the indices.
Yeah, I'm surprised. I really didn't. I usually do look at the 200-day, but I really have not been valuing historical technicals as much because this market's just so volatile. It's like, yeah, sure, that technical level could provide support for a day, but what happens the next day, it's very uncertain. So that's why I like to get into the individual stuff. How are the leaders doing? How are the micro trends doing in order to tell me just how strong that bounce is at that key support level. But that's good to know because, the 200-day clearly is a very strong support level, as is the 50-day as well. But I think due to the volatility of this market, I refuse to believe the pullback that we got is enough. And so I think around the 200-day, we would be down, 15%. I think that's a fair enough pullback for a bull market that I expect to transition over the next 1 to 2 years. That's definitely more than enough of selling.
Okay, fair point. The final thing that I want to talk about is, options, right? Obviously, we know that the market has, so I actually read some statistics about the last 10 to 15 years, okay? The overall stock purchasing volume has regressed a lot more than the options volume picking up over the last 10 to 15 years. I don't know if you knew the statistic, but when I read that, I was really surprised.
What? I'm sorry, you said the stock volume has gone down and option volume has gone up?
Yeah, so the overall purchasing of the stock itself compared to, say, the purchasing of options or derivative contracts like futures has gone up exponentially higher.
Interesting.
Okay. Mm-hmm. Yeah. So what that kind of told me is the derivative market is obviously, way bigger than the U.S. equities market because it's a quadrillion-dollar market, right? There's so much heavy speculation that happens in those markets that, of course, you're going to see enormous amounts of, volume and movement, or rather volume and money flowing into those markets. So at present moment, right, we have an extended amount of call option volume, as you can very well see in some of the top leaders like Apple and Tesla and Microsoft and even things like Peloton or AMD. My question to you is, first of all, when you look at call options like this, especially in the environment that we're in, does this give further credence to your theory that, okay, this is why I personally believe the market should go down further? Do you believe, or do you rather look at things like that?
I definitely have been looking at them for the past 2 months. And to be honest, I used to really value this type of stuff maybe like 2 years ago or whatever, but in the past 2, 3 months, I've been seeing these same numbers where calls have exceedingly outpaced the puts. And, you've seen this market run up substantially despite that huge disparity. It's interesting to see it now that we've kind of gotten some breakdowns in the market. We've saw a 10% selling in tech, and yet you're seeing all these tech names like Apple, Tesla, Microsoft, Peloton, AMD. You're seeing all of them see even more call buying once these stocks have pulled back. So you still see that type of optimism in a time where I want to see the sentiment change. So in that regard, it confirms my belief that the sentiment hasn't changed. But I'm not just directly going to look at these numbers and think, oh, automatically the market's going down Monday. I think that's not the way to look at them at all, but more so in how they fit in with my view of the sentiment of the market.
Okay, fair point. Because, the way I look at it is, if I'm seeing, so much heavy call option volume in some of the biggest tech names, and they're starting to sell off. And September to me is a very unique month because it has a few things associated with it, right? End of third quarter. We're getting into the last quarter of the year because remember, most of these hedge fund managers, portfolio managers, they are paid based on performance. So I don't know if a lot of them want to take risk going into the last quarter of the year. This is where you start seeing the profit taking potentially start picking up, right around September, October time. And again, this is something that I heard and read, from other investors in the market, where you might start seeing profit taking happening. And this could mean that the September open interest or September, options are possibly going to get, a bit of a shock, a bit of a, rude awakening, if you will. And this is why I kind of believe that, last week, I think you and I spoke, I was fairly confident that we would get a bounce back, given how this candle got bought up. But then once I started seeing this candle get sold off, I was like, okay, well, it looks like the market's going to sell off further. And if we're going to sell off further, then I'm thinking right till, pretty much the end of September, I expect selling to keep continuing. And that goes along with, your drop of, 10 to 15% that you have expectations of. And on top of that, what we stated about, the call options being high. Now, I know you stated that you're not paying that much attention to it, but I think it's important to keep an eye on things like that, because if you start seeing the stocks keep dropping pretty much, for an extended week or 2 weeks or 3 weeks, well, I'm sure as you know very well, the options premiums get crushed dramatically.
Oh yeah.
Right. And not only that, the other thing that I was noticing was, even VIX the past week, yeah, it popped a good amount, but now you're seeing it trail back even further. So what this tells me is, okay, VIX popped up and then it started pulling back. So this means that even in the volatility of the space, put options are not going to get the upper hand on something like this, because if the volatility is not coming in, you don't get the same kind of premium pops in the put options. Would you agree with that assessment?
Yeah, I think that's fine.
Mm-hmm. Yeah, so I'm kind of looking at this market as, okay, the market is going down. There's a whole lot of options activity, still active in the call option space, especially concentrated in those, 10 to 15 stocks that we kind of spoke about. And the put premium is not going to be impacted that severely because overall the volatility is coming down. So it's like the perfect setup for the market to kind of drag the, most of these tech stocks down and most of the indices down into a slow sort of painful bleed. And I think that's what I kind of see happening in the rest of September. Is I think it's just going to be a slow and painful bleed on the way down.
It could. I definitely think that's a possibility. I just think based on the current environment, what we saw in the up cycles and everything, you have to somewhat account for it on the downside, but to a higher degree. And I could be wrong on that. That's just a generalization on how I view this market, because the external factors, whether you want to say it's the virus or the Chinese tension or the election, they really haven't changed much since, we were at these levels, what was it, 3 weeks ago? Not much has changed since then. So I have to assume that the volatility level is going to remain the same as long as those factors are the same. But you're right. I mean, by that assessment, you would expect a slow bleed as the premium kind of gets weighted out.
Okay. Well, I mean, I think we've covered a lot in this analysis. Is there anything specific you want to talk about?
Is there anything? No, I think we've covered a lot.
Okay. Well, I'm going to write down some of my notes for possibly slow bleed till end of September. Let me see here. Another negative 10% pullback in tech indices. I'm trying to write there with you on that. I think I also think Bitcoin is going to get sold off. Bitcoin plus DeFi projects will sell off further if stock market drops.
Oh, actually, yeah, I would love to get your opinion on that. Just before we go, where do you think Bitcoin could go down to as a result of a widespread market pullback? Do you think Bitcoin will kind of mirror the same technical levels? Let's just say, for instance, the market corrects down to like let's say, for instance, there at 580.50. Do you think Bitcoin could correct somewhere close to the same relative level, relative to the drop in the recovery, or do you think it has the capacity to go down even more and make a lower low?
I don't know. I mean, I think Bitcoin has been performing pretty well over the last several weeks. I think just over the last week when we saw this big drop off, obviously, it's more so dollar and tech led, in a sense that the dollar was ticking up. At the same time, U.S. equities, especially tech stocks, saw a pretty, decent size sell off. So I'm thinking that these are the main support levels that I want to be watching. Okay, this is really the key range low that I would really like to be hit, because this was a 3-month consolidation area, and this area is just a big gap of just open liquidity, right? I'm sure there's a lot of stops sitting right in this area, so I'm hoping this gets hit.
Gotcha.
And if we find support there, right, one of the key moving averages that I've watched for a while on Bitcoin is the 200 moving average on the weekly time frame. It's a really very important moving average that we've held support since like 2015 or something. And I'll show you that real quick, because let me see here. Let's see. Oh, let's make this a different color. Let's make this red. It's bigger. And just in case, I mean, I'm just stating that just in case we don't hold those other, support levels. So as you can see, going back to 2015, this is a big level, the 200 moving average on the weekly, as you can see, right? Mm-hmm. Every single massive, parabolic movement that we have up, Bitcoin likes to come back to test its 200 moving average on the weekly. So just in case, the market starts selling off a bit more aggressively, that would probably imply that Apple needs to probably break this level. I don't think that Bitcoin will drop all the way down, because it's already at 10,200 technically. But from here down, it's a good 35-40% drop from where we are.
Damn.
Right.
That's 30-40% drop? That's amazing. Wow. Yeah.
Right. And I think for that to happen, I want to say that I would need to see a little bit more happening in the stock market for Bitcoin to drop that much. Possibly, I would want to see Apple drop maybe like towards 80s or 90s, and then I could see Bitcoin dropping to those levels. But it's possible, and right now, I think I still am looking at a potential bounce back on Bitcoin towards 11,000 and then potentially selling off. But obviously this ain't looking good, you know?
Yeah, that's a little bit confusing. That could be bullish though, but who knows?
Yeah, I mean, it very well could be bullish because you're, coming back to this key area which was all, previous resistance, and you're kind of just holding it as support. But I don't know, like a week and a half of just sitting here doesn't make me feel that much comfortable,
Yeah, that makes sense.
So yeah, I mean, I think we covered pretty much everything. We covered a little bit of Bitcoin, dollar, tech stocks. Um, so yeah, if there's nothing else you want to talk about, Faisal, we'll wrap it up here.
Yeah, no, man, I'm good. I was just curious about the Bitcoin stuff.
Yeah. Well, again, folks, I hope you guys enjoy the content. Make sure you hit the thumbs up. Leave us a comment of your thoughts. If you have anything else you want us to cover, specific stories, specific stocks you want us to look into, post below in the comments, or just join our Discord channel. The link is below, either in the comments or in the YouTube description. Until then, we'll catch up with y'all next week. All right. Good luck to you next week. Keep your stops tight. Take profit. Cheers.
Peace.